The Great Fall of China. Today, shares in Shanghai dropped a painful 8.5%, which then knocked over Japan's stock market down 4.6%, Britain 4.7% lower, Europe as a whole dropping 5.4%, and then to America, where the volatility was nausea-inducing till the market closed down 3.9%. Smiling, not singing, as rain soaked Shanghai and its stock market today in the worst shares rout since February 2007 or before the global financial crisis. China pedalled on regardless for years after the great global recession of 2008-9, but not anymore. Fears that China's economic approach, generating growth from debt-fueled investment, is about to run out of fuel has spooked markets, and Beijing was today unable to calm them.
The government believes they have a significant amount of control over China's economy. And to a certain extent, they even believe they can control the price of a stock. But you cannot, artificially manipulate market prices.
Over the past 35 years, the story of the world economy has really been the story of China, because from out of nowhere it became the world's second largest economy, contributing 15% of global GDP or income and 25%, that's a quarter of global growth. Now, because of its slowdown, the price of oil has tumbled back to levels we haven't seen since 2009. That's around $43 a barrel. And the price of raw materials in general have fallen back to where they were, believe it or not, in 1999, which is good news for most of us in the short term, because our money buys more petrol and food for less. But in the longer term, if China as the engine of the global economy decelerates or even grinds to a halt, we'll all be poorer. Mr. Money on Wall Street is anxious because the risks for companies of trading around the world have dramatically increased.
It means that these corporations that do a lot of business all over the world, currencies are moving around, commodities are going the wrong way. There's a lot of things they won't be able to sell to a lot of people.
But if this all sounds like bad news, if you have a big mortgage or debt in Britain, perhaps there's a silver lining.
Well, the consensus at the moment is that interest rates in the UK will rise probably in the first half of next year. And if anything, it will push interest rate rises out further into the future, say into the second half of 2016.
What powered China's growth in the years since we ran out of money in 2008 was a building and investment boom the likes of which the world has never seen, fueled by a dangerous lending boom. And today, global markets began to panic that what goes up will one day soon come down.